You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hey everybody, welcome back to another episode of the 10 Bagger Podcast. This is episode number 14. Here with me today is my friend David Erfle, who also I believe was episode were you number 1 or number 2? I forget, Dave.
I don't remember, but might have been. It might have been the first one. I think you used me as a guinea pig for the first one.
Or I think might have been our friend Nick, the mining book guy.
Oh, okay.
But anyway, you are the first returning guest. Okay, before we start, please give out your website and your newsletter information.
Oh, sure. It's my website is juniorminerjunkie.com. And you can also find me on Kitco every Friday, where I have a column that comes out every Friday morning.
Okay, great. First question, Dave. In one word or one or two words, can you describe the action in the precious metal sector over approximately the last 6 or 7 weeks?
Well, I think the word would be nuts. That's how I would describe it. I mean, I wrote my column a few weeks ago, called it "The Bear Trap for the Ages," and that's absolutely what it's turned out to be. I mean, you had all of a sudden everybody selling anything to get into dollars, and the precious metal sector got hit even worse because it's so small, and the juniors got hit really, really hard, and everybody was selling anything with a bid. And juniors that had no cash flow, that just ate up capital, were the first things to sell, and they were sold with a reckless abandon. And then all of a sudden, when the gold price had a huge V-shaped bottom, the GDX and the GDXJ did the same thing. It's crazy. I mean, the last time I saw something like this was in 2008. But it took like 7 months to a year to get back to where it was, where this time it's only taken a few weeks. So, I mean, anybody that sold and has not bought back into the sector by now, they're caught completely out of position, and now they have to chase stocks to get back in.
Yeah. I mean, GDX, let's think about this. Just looking at GDX specifically. In the last 7 weeks, it starts off with a false breakout, then a crash, then a false breakdown, and now we're literally, a couple percent away from an actual breakout. I mean, when have you seen a couple false moves and then a V-shaped rebound and potential breakout again in the span of less than 2 months? It's just, I mean, you said nuts. I would say insane. But let's talk about 2008, because we were talking before we started recording, and there are some differences between now and 2008. Maybe just in your view, I mean, what do you see that's different?
Well, what I see that's different is just like what I touched on before, just the rapidity of how fast it came back. In 2008, we had a bottom in the GDX in October of 2008. And then we had the stock market continue to go lower as the gold stocks were recovering, and the market didn't. The general equities didn't bottom for another 5 months later, while the gold stocks were recovering at that time. But what had happened in 2008 was it was correcting a huge move that had taken place over the previous 7 years. So it took place from overvaluation in a lot of the miners and the juniors down to undervaluation. Here, it took place in the juniors from undervaluation to extreme undervaluation, because you got to understand that these juniors have been lagging the miners and also silver and the juniors who were pretty much linked. They've been lagging gold and the majors ever since August of 2016. So they were already undervalued when this bear trap was sprung. So now they're extremely undervalued. And a lot of them have yet to catch up to where the GDXJ is right now. So those are the companies that your listeners need to be focused on right now. Are the best in breed juniors that have yet to catch up to the GDXJ.
Let's delve into that a little bit, because when you say best of breed juniors, it's interesting because I think of, I think of, and I don't want to name specific names, but I'm just thinking there's some out there that have already made huge moves just in the last 3 or 4 weeks, and I'm wondering, because you say best of breed juniors, but thinking about that, I think that a lot of those have already moved significantly. Yet, Dave, maybe you agree or not, but at the same time, I mean, are you saying that those juniors, despite having already moved 50, 70, 100% from the absolute lows, are you saying that they're still cheap and that there's still a lot of immediate upside potential there?
Well, I think we need to define junior here first, Jordan. The junior growth-oriented producers and the junior royalty companies, yes, they've already made the move up to where even higher than where the GDXJ has gone. But the junior developers and junior early stage explorers, the ones that are cashed up, that have really good projects with great management, that have access to capital, they're in good jurisdictions, a lot of those have yet to catch up, especially these developers who are developing lower grade projects, who are optionality plays before gold got above 1,500. But now that gold's well above 1,500, they're not optionality plays anymore. They have these huge deposits that are already defined, and now they're economic. So a lot of these companies, they've been basically waiting around for the gold price to get higher. The smart ones have not really diluted their stock very much. They know they've got optionality plays. They know that all they have to do is just wait for the gold price to get higher for their projects to become economic. And the ones that have kept a tight share structure, the ones that have kept enough cash in the bank, the ones that have not spent too much money and kept their G&A low, they're going to do really, really well. But you just have to be careful in which ones you get into.
Can you give an example of a company or two that you're talking about? I mean, I don't want you to give away everything. It doesn't have to be something that you own, but maybe just an example or two, if you don't mind.
Well, I can give you an example of one that I don't own. Vista Gold is one. They've got this hard rock deposit in Australia that's huge, the Mount Todd project, and they've done a really good job of keeping their share structure tight. They've got a U.S. big board listing, which helps immensely, because once you have the retail sector and these momentum players get into this sector, which is I think is about to take place, because once we get this breakout above this 7-year base that's been building since early 2013, it's going to bring general investors into the sector, and it's going to bring momentum players into the sector. And you want to have a handful of these juniors that have U.S. Amex listings or even New York Stock Exchange listings, because once they get to above $4, funds can get into them. See, a lot of these funds can't get into penny stocks. They can't get into over-the-counter stocks. They can only get into these Amex listed stocks and these big board listed stocks that trade over $4. So there's not that many of them out there. And if you get into the right ones, especially if they have a tight share structure and they don't have a lot of shares out in the public float, they're really going to move. So Vista Gold is one that has a really good share structure. They've got a seasoned management team that have built mines before. They've got a huge project that needs a lot of capital. I think they're looking for a partner right now. So something like that. I think VGZ is the ticker in the U.S. on the Amex.
Yeah, there's two follow-ups on that. The first one is, they're also in Australia, where the local currency is basically it's basically monopoly money right now.
Exactly.
and
The
you look,
Australian gold price is really going crazy.
if you look at the and the crash in oil. I mean, how is that going to impact these big energy intensive projects in Australia and also Canada? Because their currency is just behind Australia, not quite as weak. It just seems like the economics on some of these projects that were marginal 2, 3, 4 years ago could be insanely positive suddenly.
I mean, not 2, 3, 4 years ago, Jordan. 2, 3, 4 months ago. We had oil at $60 a barrel. We had gold at $1,400 an ounce. Now we got oil at $20 a barrel and gold at $1,750 an ounce. So these guys are rubbing their hands together going, oh boy, are we going to make all kinds of money here?
And the second follow-up was because you mentioned big money getting into the sector. That's been happening because we've seen the signs of it in Newmont and in Barrick. They've been kicking ass in the last several days. The Dow Jones U.S. Gold Mining Index made a higher high already. GDX is now on its way. Is there anything we can look for to see when that money starts to trickle in, the GDXJ type of names, more mid tiers, or even like VGC, those ones with the U.S. listings? I mean, is it volume that we have to track? Is it relative strength? Or what will you be looking for to signal that big money is now starting to go a little bit further down the food chain?
Well, we kind of had that the other day, Jordan. You and I were texting at the time when GDXJ was about to close. It was last week, and in the last minute, all this money came pouring into GDXJ right before the sector ended up beginning to break out later, and that was a tell right there. And both of us kind of said to each other the same thing, like, "Hey, look at all this money coming into GDXJ in the last minute, right before the close." I think Merrill bought $13 million or something, right? Like even after hours, right after the GDXJ closed that day. I think it was like Tuesday or Wednesday of last week. I don't remember. I know I mentioned it on Corey's show which was last Tuesday. So maybe it was Monday. I don't remember. But you see things like that. I mean, that's a huge sign, and when you see, but that's the thing. It's funny you mentioned volume. The last few days in the GDX, there hasn't really been a lot of volume while this is going on. I mean, I think once it breaks out above 31, 32, and we see volume of like over 100 million shares in the GDX, that's pretty much game on.
Okay, so getting more serious again. Let's talk about things that could benefit from a rising gold price. I mean, as the market starts pricing in 1,800, 1,900 gold instead of 1,300 or 1,400. So I know that you like developers. I mean, do you also like the slightly higher cost producers? What are some of the things, the characteristics of these companies that you looking for that makes you think, this could be like a 5 or a 10 bagger if, gold goes above 2,000?
Well, yeah, I mean, that the companies now that you want to look for are the ones that haven't caught up to where the GDXJ is, and a lot of those companies are the higher cost producers. I mean, I think the average all-in cost of production for 2019 was just below $1,000. I think it was $974 or something like that. So if you have these higher cost producers that have all-in sustaining costs of like $1,100, $1,200, their projects are economic now. They're mining gold economically right now, but their share price hasn't caught up to that yet. So they're still massively undervalued. There's a few of them out there, and those are the ones that you could get into now if you're looking for value, because like you said earlier, that a lot of these growth-oriented producers with projects that have all-in sustaining costs of $700, $800, $900, they're already up there, and a few of them, like one of my top picks for the past year or so has been Teranga, and that's trading at multi-year highs already. So some of these companies are already trading at multi-year highs before the GDX and GDXJ have broken out. So you just need to look down the food chain right now. You don't want to chase anything that's already broken out or has close to breaking out. I mean, sure, you're gonna do well if you do that, but you're gonna get. I mean, this is the 5-10 bagger podcast, right? I mean, you're gonna get if you want to buy now for a 5 or 10 bagger, you're gonna need to look for the companies that the market still hasn't found yet.
Yeah, this is the 10 baggers. Only 10 bagger podcast. Only 10 baggers allowed.
All right. Okay.
Another macro question for you. Are you at all worried about, we've had this big rebound. Gold has resistance at 1,800. A lot of resistance there. GDX has resistance at 31.32. It's coming up there. GDXJ, SIL, they're behind, so they'll have resistance too when they continue to rise. I mean, are you concerned about a pause for several months or some kind of correction?
Well, it's only natural. If once you get to an all-time high like that that we saw in 2011, it's natural to have a pullback there. And I think you've been saying that there's probably going to be a pullback around 1,800, and I tend to agree with you. I mean, if you take a look at the monthly chart of gold, it's way over its upper Bollinger Band, and it's getting really overbought in the RSI. So I think 1,800, there will be some resistance there. It'll come back. But it's going to be interesting to see what the gold stocks do when that happens, because the gold stocks have yet to break out of their 7-year base, yet gold broke out of its huge base at 1,400, and the miners have yet to do so. So will the miners pull back a little bit when gold hits 1,800 and then continue to go up while gold corrects? I mean, that's very possible, because a lot of these things are massively undervalued with gold at $1,800. I think what the market needs to see, and what the market is starting to price in right now, is a 1550 gold floor, because Jordan, that 1550 level was huge support during the last bull market. I think it touched it like 3 or 4 times before it finally broke it. And then when it broke it, that ushered in the bear, and gold went almost immediately down to 1050. I mean, it was that's how huge that support was. So now it's finally broken through that 1550, and the market is beginning to realize, hey, that's going to be a new floor. So it's going to be, like I said, it's going to be interesting to see what the miners do when gold does pull back from 1,800, like you and I think it will.
And I think we agree on this because we were talking about this beforehand. But even if that happens, the juniors that have not moved as much and the ones that are even lower on the food chain, right, those ones, they're probably won't be. I mean, as long as the correction is mild in gold, those companies may not be impacted.
No, they're sold out. I mean, everybody who was going to sell sold in that bear trap. I mean, they're sold out. I mean, I can't see very many traders in here right now. I see basically people that see this opportunity as a buy and hold opportunity in these companies. So the crappy ones, they're still going to be crappy, but the quality juniors, the ones with the attributes that I mentioned earlier, they're going to continue to bifurcate, and they're going to from the crappy ones, and then they're going to continue to play catch up to these companies that have already broken out or close to breaking out.
Well, let's talk about the crappy ones, because sometimes there can be money in crap.
Right, that's right.
And as I like to say, it's in a real bull market in this sector, turds do fly.
That's right.
And so it's not to say every small junior miner is a turd. I mean, I get that. I'm just making a general statement.
Just 85% of them.
We're just being facetious. But Dave, with that said, well, last question here. Can we focus a little bit on like the penny juniors and those more early stage ones? Because it seems like, 2 or 3 months ago, that's what we were. It's one reason why I started this podcast, because I was thinking we're going to have this huge breakout in the sector, and the real opportunity is going to be in these, ground floor penny juniors, because everything else has already moved. And so, of course, they haven't really moved in the last couple of weeks. I mean, depending on what you look at. Right. what should we be looking for in those names, like those companies that they're trading at 5 cents or 10 cents, they're smaller, they only have a few drill holes or whatever. Because I mean, as you know, in a real bull market, it's like Tommy Humphreys was on one of our episodes, and he said, companies can go from a 10 million market cap to a 50 million market cap for no reason.
Right.
So
right.
when we're looking at those types of companies, those early stage, penny juniors, what criteria should we look for in order to give ourselves a list so we can eliminate that 85%?
Well, the big, huge one, Jordan, is management and their access to capital. Because it was already tough to raise money before this crisis took place, and a lot of these companies that are in jurisdictions where the government has not deemed mining essential, they're shut down. So they're sitting there eating capital. They have no cash flow, and they're just sitting there eating capital. So with really they have a temporary date that they think they're going to start operations again, but the market or nobody really knows if that's really going to if that date is solid or not. So I think once we start to see these governments open up their mining, let these mining projects start to get back to work again, I think that's a big sign. But you still want to make sure that you get into companies that they got to have enough cash for the rest of the year, for one, and preferably into next year too. I mean, I don't want to invest in anything right now that doesn't have enough cash to the end of the year. I don't care how good their management team is and their access to capital is. But you do want to make sure that the management team does have that access to capital in the long run. If you want to be a buy and hold here, because that's huge. I mean, like I said, it was already difficult to raise money before this happened, and now it's extremely difficult to raise money.
Okay, with that said, any final thoughts before we sign off?
Oh, yeah. I mean, I think that this is 2000. This is January 2000, not January 2016. Maybe this is like March 2016 right now. That's how I'm looking at this sector. I mean, it's got everything going for it. You got negative real rates. You've got modern monetary theory money going all over the place, being created from nothing out of the Federal Reserve and all these other central banks all over the world. They're bringing out all their Keynesian models to print as much money as they possibly can to stop this. And you've got lack of faith in government currencies all over. I mean, you've got all these currency, all these gold prices and all these foreign currencies making rip-roaring highs. And I think every single major currency but the U.S. dollar now has an all-time high. Am I correct in that? I mean, you know better than I would. But, I've never seen a better environment for gold right here. I just haven't. And then on top of that, you've got these juniors that are pretty much sold out after the mother of all bear traps caught everybody out of position. So everybody that was going to sell these juniors have already sold. They got a lot of catching up to do. You just got to make sure you buy into the right ones.
And just to clarify, when you say March 2016, that doesn't mean you're predicting like a huge decline 6 months from now. A major top. No. I'm just saying the environment, meaning the undervaluation in a lot of these companies. I mean, that's how I look at it. I mean, because from January to March of 2016, you had extreme undervaluation in a lot of these stocks after the GDX had gone down, I think, 85% in 3 years. So, I mean, like I said, I mean, these juniors, they've been in a bear market still. They haven't been in a bull market yet. Sure, there's been select juniors that have done really well, but the juniors as a sector have been in a bear market. I mean, look at the venture. I mean, it was continued to make all-time lows all the way down into March. I know it's only 50% miners now, but I mean, we've got incredible opportunity here. I mean, and
like I said, just make sure you get into the right companies. And if you need help doing that, you have a newsletter. I have a newsletter. There are other newsletters out there that are very good if you need help. But this is an incredible opportunity right here.
Okay, and Dave, one more time, give out your newsletter and your website.
Oh, sure. It's juniorminerjunkie.com. That's junkie with a Y. And you can find me on Kitco every Friday.
Okay. Great work, Dave. Thanks so much, and I look forward to doing this again in the months ahead.
Me too, Jordan. Thanks a lot.
Thank you for listening to the 10 Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.